Hello everyone, welcome to another segment of intellectual brainstorming and academic excellence. My name is David Oni, or you can call me the Great Mindset. I want to use this medium to say a very big thank you to my returning subscribers and those that are actually watching my videos. I really appreciate you guys and may the good Lord bless you all, amen. So today I'm going to continue from where I actually stopped last time, which was on the mutual funds and the index funds. And if you remember, I promised I was going to be talking about exchange trust funds. So today I'll be concluding on that series on the index funds and the mutual funds and exchange trust funds. Now, when you talk about an estate trust fund, what is an exchange trust fund or ETF? You see, an exchange trust fund or ETFs is a pool of investment security that can actually be bought and sold like individual stocks. If you could remember, we discussed these things under mutual and the indexed funds. But when you're talking about ETFs, you're talking about a pool or conglomeration of investment security that you can actually buy and sell like an individual stock. Exchange trust fund can be structured, to track anything from the prices of a commodity to a large and diverse collection of security. That is the beauty of ETFs. So ETFs can also be designed or can even be designed to track specific investment strategies, and there are various types of ETFs that are actually available to investors for income generation, speculations, and the price increases. So the purpose or the parameter for ETFs is for the generation of in what I call income, including index funds and mutual funds. Now, if you've not watched that video on index funds and mutual funds, I want you to go and watch that video after watching this video so that you can have a clear analysis of what ETFs, index funds, and mutual funds are all about. You see, ETF fund prices, they actually fluctuate all day, as ETFs is bought and actually sold. What we're saying here is that the price of ETFs are not definite and they actually fluctuate. That is, they go up and they can also come down. That is, they are actually different from mutual funds, which can only trade once in a day after the market closes. Mutual funds, if you remember in my last discussion, I said you can only trade on it once in a day. But for ETFs, that is exchange trust funds or equity trust funds, it can trade at any point in time in a day, and it is not definite, like what I call mutual funds. An exchange trust fund must be registered with the Security and Exchange Commission, unlike the mutual funds. So ETFs share prices are determined throughout the day, as the price of the ETFs are fluctuating throughout the day. So they can be bought and be sold. You can buy and sell ETFs throughout the day, unlike mutual funds that can only trade once in a day. Now, there are different types of ETFs, and I'm going to do justice by looking at them one after the other. Number one of them is what we call so that when you come across these ETFs, you can actually be able to know what they actually means. Number one is what we call passive ETF. What is a passive ETFs? So passive ETFs, aims to replicate the performance of a broader index, such as the S&P 500, or a more specific targeted sector or trend. If you can remember, I talked about S&P 500 in my previous lecture, and I said when you're referring to the S&P 500, you are referring to the largest companies in the United States of America, and there are many of them like Vanguard, like BlackRock, like Alibaba, like Facebook, like Google, and the rest of them. They fall under the S&P 500. That is the 500 largest companies in the United States of America. So passive, ETFs they tend to replicate the performance of a broader index, such as the S&P 500. The second one is what we call actively managed ETFs. Actively managed ETFs. What does it mean? what we're saying here is that it does not target an index or what of securities, but rather have a portfolio manager making decisions about which securities to include in the portfolio. So it can be more expensive to operate and actively manage the ETFs compared to a passive ETF. The reason is that they are actually managed by portfolio managers. So the actively managed ETFs is another kind or types of exchange trust fund. So now I've mentioned two. I've mentioned what we call passive ETF, and I've mentioned what we call actively managed ETFs. Now the third one is what I call the bond ETF, bond ETF. Now it is actually used to provide a regular income to investors, and the distribution actually depends on the performance of what we call an underlying bonds, which may include government, corporate, state, and the municipal bond. So it does not have any what we call a maturity date. That is number three, which is what we call the bond ETF. So it actually provides what we call regular income to investors. So if you are an investor and you actually want to make money regularly in ETFs, then I think the bond ETF is actually the good one for you, where you can actually make more money for yourself as an investor. So, and don't forget that the performance, the division of the bond ETF actually depend on the performance of bonds, which may include what we call government bonds, corporate bonds, and state bond or local bonds, which can also call the municipal bond. That is the third type of ETF. I've mentioned passive ETF, I've mentioned actively managed ETF, and I've mentioned the bond ETF. Now, number four is what I call the stock ETF. What do you mean by stock ETF? So it's a basket of what I call the stock that track a single industry or sector. The aim is to provide what we call diversified exposure to a single industry. If you are talking about a stock ETF, it's actually a basket of a stock is a conglomeration of stock, and that tracks actually a single industry or a sector in the economic system. Now, the aim is actually to provide diversified exposure. So if you are looking for a diversified exposure, then the stock ETF is actually the one you should do at the end of the day. Now, don't forget, I am not your financial manager. I'm not your financial advisor. I am only lecturing. So if you need more professional advice, please consult your portfolio investment manager at the end of the day. Another one is what we call industry or sector ETF. Industry or sector ETF. What's an industry or sector ETFs? Now, they are funds that focus on a specific sector or industry. For example, we have what we call the energy sector. So if ETF will include companies operating in that sector, like what I've said earlier, energy sector. So they are actually funds that would actually focus on a definite or a specific sector or industry under the exchange trusted fund. So if you are talking about an industry or a sector, ETF, it actually focus on on the specific sector in the ETF or the industry. And I've mentioned when I said energy sector. And don't forget that we have various sectors in the economy: energy, manufacturing, medicine, and so many of them like that, defense, IT, and many of them like that. That is what the industry or sector ETF is actually talking about. Then number six is what I call commodity ETFs. Now, when you talk about commodity ETFs, they actually invest in commodities like crude oil or gold. It can diversify a portfolio and holding shares in a commodity. So ETFs that are commodity ETFs are actually cheaper than physical possession of the commodity. Commodity ETFs, don't forget, they actually invest in commodities like crude oil or actually gold. So if you're talking about that kind of a commodity, I mean that kind of an ETF, you are actually referring to also a commodity ETF. Then the next one, which is number seven, is what I call the currency ETFs. Don't forget, there are many of them. So what is a currency ETF? You see, currency ETF actually tracks the performance of what of currency pairs consisting of what of domestic and what and foreign currency. It can be used to speculate, the price of of currencies based on what on political and economic development in the country. So currency ETF is another kind of what of an ETF. Then number 8 is what I call a Bitcoin ETF. So you can see that many of them: Bitcoin ETF, currency ETF, commodity ETF, industry ETF, stock ETF, bond ETF, actively managed ETF or what or passive ETFs. They're all kinds of what of ETFs. So that's why you need to be watching my videos to know all these terminologies. Even though you are not in that line, you can be able to have what we call financial education on where to actually invest the money and make more money for yourself at the end of the day. So then that's about what we call the Bitcoin ETF. So there are ETFs that actually expose investors to Bitcoin prices, as it moves in their regular, in their regular brokerage account by purchasing and holding bitcoins as underlying what asset. Do you get that? So if you're talking about Bitcoin ETFs, they are ETFs that expose investors to Bitcoin prices, moves in their regular brokerage accounts. Do you get it now? So if you're talking about that ETFs that can actually expose you to ETFs that where you can actually invest the money on bitcoins, then you need to go for what we call a Bitcoin ETF. Then you ask me, what are other types of ETFs that we also have? We have what we call Ethereum's ETF, we have what we call inverse ETF, and we also have what we call leverage ETFs. There are many of them, many of this ETF. So if you don't have an idea, if you don't have the financial education, please don't invest your money. Seek what we call professional advice from your portfolio investment manager before you invest your money. So I am just giving my own lecture. I am not your financial advisor. So seek financial advice from portfolio investment managers, and they will actually advise you where you can actually put your money. For me, I do what we call mutual money market funds, which are under mutual fund, and that's why I earn money every day. So seek for professional advice for your portfolio investment manager before putting your money into index funds or mutual funds or extend their trust form. Please guide yourself in this regard. How can you actually invest in what in the ETFs? Some people have actually asked me that question, that how can you actually invest in what in ETFs? That is exchange trusted funds. You see, ETFs actually trade through online brokers and traditional brokers dealers. Do you get it now? So you need to meet online brokers or traditional brokers, brokers or dealers that this on ETFs, because you can actually invest in the ETFs. So individuals can also purchase ETFs in their retirement accounts. Do you get it now? So if you have a retirement account or what I call retirement savings account, you can also invest in the ETFs at the end of the day if you want to actually invest your money in this regard. So after creating and funding a brokerage account, investors can actually now search for ETFs and make their choosing buy and sell. So don't forget, ETFs is only about buying and selling of ETFs that I've actually mentioned so far, like passive ETFs, like industry or sector ETF or commodity ETFs or currency ETFs or Bitcoin ETFs. They're all forms of ETFs. Now, what are the most popular ETFs for investors? So if you actually want to invest your money, what are the popular ETFs that can actually invest your money into? So below are actually examples which I'm going to mention of popular ETFs in the market. So some ETFs actually will track an index of stocks, like while others actually will target a specific industry. I've mentioned that before. Don't forget. Now, number one is what I call SPPR or S&P 500 that tracks with the S&P 500 index. They also have what we call iShares Russell 2000, which is IWM, which tracks what the Russell 2000. We have what we call the Vesco QQQ. It tracks what we call Nasdaq. To get it now, I don't know whether you remember I mentioned something like Nasdaq, I mentioned the S&P 500, I mentioned the Dow Jones. They are all under any investment portfolio as long as it has to invest in your money. Then you also have what we call the SPDR, Dow Jones Industrial Average. Then we also have what we call the sector ETFs that tracks what we call individual industries. Then we also have what we call lastly what we call commodity ETFs that represent commodities markets such as what we call gold, silver, crude oil and natural gas. So these are the popular ETFs that can actually invest your money and you get returns at the end of the day. SPPR, which tracks what the S&P 500. We have what we call the iShares Russell 2000. We have what we call the Invesco SQQQ. We also have what we call the SPDR, Dow Jones Industrial Average. We also have what we call the sector ETF, where we have what we call the commodity ETFs. And like I was saying earlier, you actually need to meet your investment portfolio manager to actually know where you can actually invest your money. And apart from that, you also need what we call financial education to actually also decide where you're actually going to invest your money. So financial education, like I said earlier, in a capitalist system is very important before you can actually invest your money, so that at the end of the day you will not lose and regret actually investing your money. So you need financial education in a capitalist system, like I earlier stated that in the capitalist economic system, that those that does not have financial education might not actually make more money in this economic system. But if you have financial education, you'll be able to apply your money where your money will begin to grow for you and begin to work for you. And that's why I've taken it upon myself to actually discuss about the index funds, the mutual funds, and the ETFs, like I've just finished now. And don't forget that before you invest, please meet your portfolio investment manager. Like I said earlier on, that I'm going to be investing my money in Quantum Zenith at the end of this month, where I'll be putting my money in money market funds and I'll be earning money every day as well. And when you get to that point, we call it a diversification of portfolio investment. So what I'm trying to do is to diversify my portfolio investment and generate more income for myself at the end of the day. So you need to pick a leaf from this and try and actually invest your money so that your tomorrow can actually be good. And when you are talking about investment, don't forget that it's actually a decade of sacrifice. It's not something that you have to do now and just live. It's something that you have to be building over the years. And after some point in time, your money will begin to fund your lifestyle, and you can actually live a life that you actually desire for yourself, where you can actually retire comfortably without any stress or any problem. So the purpose of investment is actually to fund your lifestyle in the future, to live a good life, to live a decent life, so that you don't need to be begging before you actually eat. Then when you actually go through this decade of sacrifice, you can comfortably retire and enjoy your money at the end of the day. So making wealth, making investment, making money, becoming wealthy or rich is as easy, as simple as ABC, if we actually follow the pattern or the laid down rules, or the pattern or the ways through which you can go about it. And what is that way? The solution to this is actually investing your money. So you need to invest your money. You need to put something there at the end of the month. You need to put your money into three parts. Don't forget savings, investment, and spending. But the investment is the crucial part, where you actually set aside some money and your money start working for you. Like my money is actually working for me at the end of the day. So your money can also be working for you if you actually invest your money. So on this note, I'm going to round up on the various funds that we can actually ever mention. I've discussed about index funds, I've discussed about mutual funds, and I've concluding now on what we call the exchange trust fund, which is what we call the ETFs. So these are the three kinds of funds that you can actually invest your money in. But before you invest this money, don't forget, meet your portfolio investment manager. But for me, I invest my money in money market fund, and I make my money every day. So you can be part of this success story. And if I've actually gained something from this video, please subscribe now, and leave your comment and share the videos to the outside world, so that everybody can benefit from this financial education and the fountain of financial analysis and knowledge building. To meet next time, I want to say a very big thank you to my returning subscribers. God bless you. You guys have been wonderful. May the good Lord bless you. And if you never subscribe, I beg you, subscribe now and share that video. Till I meet next time, remember your humble loyal, pragmatic, inventive, productive, pragmatic, resilient, determined, focused David Oni. My YouTube channel once again is the Greater Mindset. So till I see you next time, remain blessed and God bless you all. God bless Nigeria, God bless Lagos State, and God bless the whole world. Thank you and goodbye. Bye bye.